The dollar dips versus the yen after the Japanese election, and gold soars to a 4-week high. We have Peter Hug next. We start this week off with Peter Hug, Kitco's Precious Metals Director. Thanks for being with us.
You're welcome, Daniela.
Obviously, a clear break in the gold market today, Peter. And last time we spoke, you were bearish at $12.97. You said we would need to have a clear break at $13.24. How are you seeing the market set up today?
Yeah, I want to, for the sake of the people that are listening, I want to be very clear when I use the term bearish and bullish. They're probably terms I should not be using. What I should be saying is at $12.97, and we took the position. The market looked hesitant to break through 1300, so the trade was to short the 1300 resistance. The trade proved to be a good trade. It dropped $24 after the trade, trading down into the low 1270s. That's a trader's trade, and the markets are fluid. So basically, at those types of levels, you make a decision: do you cover the position, or do you ride the position? Likewise, on this break above 1300, I suggested if gold broke through 1300, that we would see a possible test of 1324 almost immediately. 1300 break on the upside then is your buy signal, with 1324, 1325 a level where you would consider taking your profits on the trade. So it's a very fluid. It's a very fluid animal when I sort of give those types of point parameters, and when I do a trade, I could be out of that trade in 10 minutes. Unfortunately, I'm not live 24/7, so it's difficult for me to continue to update the trade. So I guess my position would be that when you see resistance levels and difficulty getting through those resistance levels, which we saw last week at 1300, the trade's a short. Vice versa, when it breaks up through resistance levels, the trade's a long. Now, unfortunately, both trades occurred in Asian markets, and unless you're an aggressive trader and you've got the ability to trade overseas or through the Globex market on the futures, you miss a lot of these moves because the last 2 or 3 prominent moves through resistance and support have happened in the Asian markets.
And thank you for that clarification, Peter. Obviously, we don't have you by our side 24/7, but looking at the market today, what are you doing?
This market, quite frankly, was take your money off the table at 1325. And which is what we did. After that, at 10 o'clock, the housing starts came out much worse than, not much worse, but worse than expected, which added a continuous momentum to the market and broke it up through 1325. You would suspect the momentum to carry this market to 1350. I am not seeing the momentum yet. I'd like to see the close today. If we can get a close over 1325.27, you could step in and buy the market with an expectation of a 1350 print. If, however, this market closes below 1324 today, I would suspect that I would be on the short side of this trade. The gaps have now filled in all the way up from April to the 1325 level. I think we're going to need to see more confirmation and momentum. Now, this may come from Asia, and you might see a 1350 open tomorrow morning. But the housing numbers took it over 1325, and now it's stalling. I would like to see a close above this level before I aggressively enter the long side.
So, Peter, what would you say is driving that momentum? Is it the fact that Fed Chairman Ben Bernanke has done a good enough job of convincing the marketplace that the U.S. monetary policy will remain accommodative?
Well, I think there are two things. One, I think they finally got Bernanke's message right. This guy is not going to step in the way of an economic recovery by raising interest rates or even by paring back the bond purchasing, at least in my opinion. And I sound again like a broken record. I've been saying it since September of last year. I do not see him moving on this until at least 2014. And that's then questionable because he may not be the one moving. He may be out in January. So you have continuous monetary stimulation occurring not only in Europe, Japan, China, but also now in the U.S., a confirmation from Bernanke that he is going to continue to be accommodative. You add on top of that the physical demand that continues to come out of Asia, ETF outflows slowing, and you have a market that's conducive to scaring the shorts, which happened overnight in Asia, and an argument to be made that if gold is going to move from a perspective of low, zero-cost monetary policy, it's a good buy. And I think that's what you're seeing in this market right now.
Peter, and just some quick thoughts on silver now before I let you go. I know you were looking at 2150 if gold could hold 1324.
Yeah, silver's a little disappointing to me here. It was a given trade last night. I was watching Asia at about 2 in the morning, and gold was trading at around the 1310 range, and silver was only up 25 cents. So there were one of two things that could happen, obviously. One, gold had reacted too quickly and was due to come back down to 1300 before we opened this morning, or silver was behind the curve, and obviously silver was behind the curve and opened up this morning at 2025. I'm a little disappointed in silver. I thought gold here at 1324 would have silver trading up in the 2080, 21 level. It's not there yet. However, I think if gold holds this level, silver's going to catch up. And it wouldn't surprise me, without gold moving too much further, if gold held here at 1325, seeing silver at close to 21 tomorrow would be a reasonable possibility in my mind.
All right, Peter, thank you so much for that.
You're welcome.
And thanks for watching this edition of For Pete's Sake. Email us at newsfeedback@kitco.com, or you can follow me on Twitter at Daniela Camboni. Thanks for watching.